as ancient metal stands amidst the storm of the modern world. For thousands of years before paper money or central banks, through wars, economic crises, and technological revolutions, gold has maintained its unique place in human consciousness. As we approach 2026, the world remains turbulent. The big question arises, will gold prices continue? To predict gold prices, we must look beyond mere charts. We must consider the entire global landscape. The global economy still grapples with persistent inflation. Geopolitical tensions show no signs of cooling. Nations are increasing their gold reserves, reducing dependence on the US dollar. AI and digital finance are developing rapidly, creating new instabilities. In this context, several factors will influence gold prices in 2026. If central banks continue to loosen monetary policy, when currency loses value due to inflation, gold often becomes a tool to preserve wealth. 2026. History shows that whenever the world is unstable, gold prices almost always react positively. Even a single escalating flashpoint. From thousands of years ago, before paper money or central banks existed, gold stood as a symbol of value and security. Through wars, economic crises, and technological revolutions, gold has maintained its unique place in human consciousness. As we look towards 2026, the world remains turbulent. The big question is, will gold prices continue to rise? To forecast gold prices, we must not just look at charts, but at the entire global landscape. To the two of the above. The global economy still grapples with persistent inflation. Geopolitical tensions show no sign of easing, and nations are increasing gold reserves, reducing reliance on the US dollar. While AI and digital finance rapidly advance, they also create new instabilities. Gold continues to be seen as the ultimate defensive asset. Now, let's examine the factors influencing gold prices in 2026. First, global monetary policy. If central banks continue to loosen monetary policy or maintain low interest rates, gold prices tend to rise. Next, inflation and currency purchasing power. When currency loses value, gold often becomes a tool to preserve assets. The global economy continues to grapple with persistent inflation. Nations are increasing their gold reserves, reducing reliance on the US dollar. While AI and digital finance rapidly advance, they also create new instabilities. In this environment, gold continues to be seen as the ultimate defensive asset. One key factor is global monetary policy. If central banks loosen policy or keep rates low, gold prices tend to rise. Another is inflation and the purchasing power of currency. As money loses value, gold becomes a tool for preserving wealth. Geopolitics and conflicts also play a significant role. History shows that global instability almost always prompts a positive reaction in gold prices. Finally, the rise of digital assets. Despite being called digital gold, their volatility often drives investors back to traditional gold. Now, let's explore 3 scenarios for gold prices in 2026. Scenario 1, a significant increase. Geopolitical tensions show no signs of easing. Nations are increasing their gold reserves, reducing reliance on the US dollar. AI and digital finance develop rapidly, but also create new instability. In this context, gold continues to be seen as the ultimate defensive asset. So what are the key factors influencing gold prices in 2026? Firstly, global monetary policy. If central banks continue to ease policy or keep interest rates low, gold prices tend to rise. Secondly, inflation and currency purchasing power. As currency depreciates, gold often becomes a tool to preserve wealth. History shows whenever the world is unstable, gold almost always reacts positively. Just one escalating hotspot and the gold, Bitcoin and digital assets are called digital gold. But paradoxically, their strong volatility makes many investors return to traditional gold. Let's explore three possible scenarios for gold prices in 2026. Global monetary policies significantly influence gold's trajectory. If central banks maintain low interest rates, the cost of holding gold decreases, making it more attractive. Inflation concerns are unlikely to vanish by 2026, challenging the purchasing power of traditional currencies. In such times, gold traditionally serves as a vital tool for wealth preservation. Geopolitical tensions continue to be a significant driver for gold prices. History confirms that any escalation in global instability causes gold markets to react positively. While digital assets like Bitcoin are dubbed digital gold, their inherent volatility often pushes investors back to physical gold. Our first scenario suggests a strong increase where inflation returns, conflicts intensify, and the global economy weakens. The second scenario projects a stable increase, with gold acting as a long-term store of value amidst controlled global instability. Finally, a slight adjustment might occur if economies recover strongly and interest rates rise, though this is considered less probable. As the ancient metal stands amidst the storm of the modern world. For thousands of years before paper money or central banks, gold was a symbol of value and power. Through wars, economic crises, and technological revolutions, gold has held its special place. Now, as we approach 2026, the world remains turbulent. The big question is, will gold prices continue to rise? To predict gold prices, we must look beyond charts and consider the global landscape. The global economy continues to grapple with persistent inflation. Geopolitical tensions show no signs of easing. While AI and digital finance rapidly advance, they also create new instabilities. In this complex environment, gold remains the ultimate defensive asset. Global monetary policy significantly influences gold's path. Persistent inflation erodes currency, making gold a key protector of wealth. Geopolitical tensions historically drive gold prices higher during global uncertainty. The volatility of digital assets often redirects investors back to the stability of physical gold. Scenario 1 suggests a strong increase, with gold setting new peaks. Alternatively, a stable increase sees gold grow steadily, a long-term value keeper. A slight adjustment is possible if the economy recovers robustly, though less probable. For individual investors, gold is not about quick wealth, but about protecting assets. Gold's role is more than just its price. It reflects human trust and resilience. In a digital world, gold retains its unique position: slow, persistent, and full of character.